Good morning, everyone. So our today's topic is general deduction. Deduction from gross total income. Now, everyone knows that there are 5 heads of income, right? So what is gross total income? Total of 5 heads, right? So one is salary. Second is capital gain, PGBP, house property, and IFOs, right? So total of this, all 5 heads of income is treated as gross total income. Of this, all 5 heads of income is available from this treated as total income under chapter 6A. So we reduce the deduction from gross total income, and the resulting figure is net total income. That is my taxable income. Okay. So what is this deduction under chapter 6A? That we will discuss. As we have seen earlier, section 10 exempts certain income. Exempt, what is the meaning of exempt? The income do not form part of your total income, your gross total income, right? Say for example, share of profit from partnership firm in the hand of partner is an exempt income, right? So it is not part of your total income. Such income are excluded from total income and do not enter into the computation process at all. On the other hand, chapter 6A contains deduction. Now, what is deduction? Deduction is available from your gross total income. Okay. The important point here it is, if there is no gross total income, say for example, my gross total income is nil, then in that case, deduction under chapter 6A is not available to me. Okay, so you cannot deduct deduction under chapter 6A if your gross total income is nil. So there are section 80A states that in computing total income of an assessee, there shall be allowed from his gross total income the deduction specified in section 80C to 80U. We will discuss every section in detail. Okay. It is charging section. Section 80 is a charging section, right? Everyone knows that every head is a charging section. Same way, 80A is charging section for deduction under chapter 6A. According to section 80A subsection 2, the aggregate amount of deduction under this chapter shall not in any case exceed the gross total income of assessee. Say for example, my gross total income is 1,80,000. Okay, then in that case, my deduction under chapter 6A cannot be more than 1,80,000. So I cannot claim loss by way of claiming deduction under chapter 6A. Thus, an assessee cannot have loss as a result of deduction under chapter 6A and claim to carry forward the same for the purpose of set-off against his income in subsequent year. Section 80A3 states that if an assessee is an AOP or BOI, then if AOP and BOI claim deduction under section 80G, this all are deduction for donation and etc. Right? That we will discuss in CA final. So if AOP claim the deduction under chapter 6A, then the member of AOP cannot claim the same deduction in their total of their income. Okay, say for example, AOP claim deduction of 50,000 under section 80G. Then member of AOP cannot claim the same deduction in their total income. The profit and gain allowed as deduction under section 10AA or under any provision of chapter 6A under the heading deduction in respect of certain income in any assessment year shall not be allowed as deduction under any other provision of such assessment year. Meaning thereby You cannot claim deduction twice. You cannot claim deduction twice. Say for example, I claim deduction under section 10AA. So I cannot claim the same deduction under chapter 6. Okay. Just like one income cannot tax doubly. Same way you cannot claim deduction twice. The deduction referred to in 4 above shall not exceed the profit and gain of undertaking or unit or enterprise or eligible business as the case may be. You cannot claim deduction more than your profit under section 10AA. It is very important, my dear friend. If you want to claim deduction under chapter 6A, then you have to file your return of income within due date. Okay, if you are not filing your return, then you are not eligible to claim deduction under chapter 6A. No deduction under any of the provision referred to in 4 above shall be allowed if deduction has not been claimed in return of income. Transfer price of goods and service between such undertaking. In 10AA deals with SEZ units. Okay, so if the transfer of goods and services between such undertaking, then the value of such goods and services should be the market value. Okay, say for example, unit A and unit B is there. Unit A transfer goods to unit B at 80 rupees per unit. Okay, and the market value of such goods is 100. Then you have to take this market value. Okay. Now what is market value? In relation to any goods or service sold or supplied, it is for sale. The price that such goods or services would fetch if this were sold by the undertaking or unit or enterprise or eligible business in open market. If, say for example, unit A sold such goods to open market, then unit A will charge 100, right? So in case when unit A sold goods to unit B, if the price is 80, then you have to take the market value only. Sold by undertaking or unit or enterprise or eligible business in open market, subject to statutory or regulatory restriction if any. In relation to any goods or service acquired, this is for purchase, it is for sale, and it is for purchase. The price that such goods or services would cost if this were acquired by undertaking or unit or enterprise or eligible business from the open market, subject to statutory or regulatory restriction if any. Where a deduction under any provision of this chapter under the heading C, deduction in respect of certain income is claimed and allowed in respect of profit of such specified business for any assessment year, no deduction under section 35AD is permissible in relation to such specified business for the same or any other assessment year. Yani ki if you claim deduction under chapter 6A for specified business, the list of specified business is given under section 35AD, which you have already studied in PGBP chapter, right? So if you claim deduction of specified business in chapter 6A, okay, then in that case you cannot claim deduction under section 35AD. Same way, if assessee claim the benefit of deduction under section 35AD, so if you take the benefit of section 35AD, then you cannot claim the same deduction under chapter 6A. Okay. Section 80AB. Deduction specified in chapter 6A under the heading C. Deduction in respect of certain income shall be allowed only to the extent of such income computed in accordance with the provision of Income Tax Act 1961 included in gross total income of assessee. 80AC stipulate compulsory filing of return. So if you are not filing your income tax return within due date, now what is due date? Due date is mentioned in section 139 subsection 1. I just briefly explain you in case individual, HUF, AOP, BOI, firm, LLP, yani other than company. If an assessee is an other than company and the audit is not applicable, then the due date is 31st July of assessment, right? And in case of assessee other than company and the audit is applicable, then the due date is 31st October of assessment year. And in case of company, the due date effect of certain income. See, in this case, section 80A to 80IE, 80JJA, here the list is given. 80M, 80P, 80PA, in respect of certain income, we will study in final level. It is not in your syllabus. Okay. So 80IA deals with deduction in respect of profit and gain from undertaking or enterprise engaged in infrastructure development, operation or maintenance. See, 80IA to IE deal with different kind of business, and if you fulfill all the conditions given in 80IA to IE, the different kind of business, then in that case you are eligible to claim deduction. Say for example, 100% of your profit for first 10 years, 50% of your profit for next 5 years. Okay. So these are the specified business mentioned in different sections that you will discuss in detail in final level. So as of now, we just discussed the list. Okay. 80IA deal with deduction in respect of profit and gain derived by an undertaking or enterprise engaged in development of SEZ. 80IAC deal with deduction in respect of profit and gain derived by an eligible startup from an eligible business. Deduction in respect of profit and gain from certain industrial undertaking other than infrastructure development undertaking, because infrastructure development undertaking is covered under section 80IA. 80IBA deduction in respect of profit and gain from housing project or rental housing project. 80IE deal with deduction in respect of profit and gain from manufacture or production of eligible article or thing, substantial expansion to manufacture or produce any eligible article or thing, or carrying on of eligible business in northeastern state. Deduction in respect of profit and gain from business of collecting and processing of biodegradable waste. 80JJAA is in your syllabus and it is important. 80JJAA deal with deduction in respect of employment of new employees. This we will discuss later in detail. Deduction in respect of certain income of offshore banking unit and international financial service center. Deduction in respect of certain intercorporate dividend. Deduction in respect of income of cooperative society. 80PA deduction in respect of certain income of producer company. 80QQB, this we will discuss in detail later. This both we will discuss in detail. Deduction in respect of royalty income, etc. of author of certain book other than textbook. And 80RRB deduction in respect of royalty on patent. The effect of this provision is that in case of failure to file return of income on or before the stipulated due date, the undertaking would lose the benefit of deduction under this section. So, if you are not filing your return of income within due date, then you cannot take benefit of all this section and you are not eligible to claim any deduction. Okay, so precondition to claim deduction under chapter 6 is you have to file your return of income within due date. Let us discuss the illustration number 1. See, we will discuss every illustration and you have to answer all illustration, right? For grant of deduction under section 80JJAA, filing of audit report in prescribed form is must for corporate assessee. filing of return within due date laid down in section 139 is not required. Is it correct or not? Chalo everyone, is it correct or not? Give your answer. Chapter 6 is heading of this deduction. Chapter 6A. This is chapter 6. Chalo. Tell me everyone, the statement is correct or not? Very good. Incorrect, right? Because the precondition is filing of return within due date is mandatory. Second question is filing of belated return under section 139(4). Belated return means you filed your return but after due date. Okay, you filed your return but after due date. Of Income Tax Act 1961 will debar an assessee for claiming deduction under section 80 QQB. Chalo, the statement is correct or not? Chalo, the second statement is correct or not? Right, it is. Chalo, the second statement is correct or not? Second is correct. Right? Why? Because the second statement states that if you are filing late return, if you file your return after due date, then you are not eligible to claim deduction under section 80 QQB. Debar and assessee. Debar matlab you cannot claim deduction under section 80 QQB. So the second statement is correct. Right? Chalo. Section 80B subsection 5. Gross total income means see, Ayush, we can claim deduction only after filing return of income within due date. Within due date. In second question, the assessee has filed return after due date. Okay, belated return. So it is after due date. Gross total income means total income computed in accordance with provision of Act without making any deduction under Chapter 6A. Yani, we will discuss all the deductions. So before claiming this deduction, the total income of all the 5 heads is treated as gross total income. Computed in accordance with the provision Act imply the deduction under appropriate computation section have already been given effect to. This that means, say for example in salary, there is standard deduction of rupees 50,000, right? So you have taken standard deduction of 50,000 and after that you come to taxable salary incomes. Okay, so for gross total income you will take the salary after claiming standard deduction of 50,000. Same way in case of house property, there is 30% standard deduction, 30% of NAV is standard deduction and interest on borrowed capital. Okay, so in case of house property, you are taking taxable income from house property after taking into account 30% of standard deduction and interest on borrowed capital. So what this statement state that you have to take your taxable income after taking the appropriate deduction available in the respected head of income. That income of other person, if includable under section 60 to 64, has been included. And clubbing. So in computing gross total income, you have to include the other person's income in your income if the clubbing provisions are applicable. Say for example, income of minor child included in parent, included in income of parent, right? The intra-head or inter-head losses have been adjusted. You have to adjust the loss, whether it is intra-head or inter-head. And that unabsorbed business loss, unabsorbed depreciation, etc. have been set off. After all this, you come to your gross total income. Okay. Then from gross total income, you will claim deduction. Let us first consider the deduction allowable in respect of certain payment. Section 80C. Section 80C. Deduction in respect of investment in specified asset. In this case, if you invest in specified asset, there are list of assets. There are list of assets given in section 80C. So if you invest in certain assets, then you are eligible to claim deduction from your gross total income for that investment. Okay. Section 80C provides for deduction from gross total income of saving in specified mode of investment. See, if you are investing in some asset, then it is one kind of saving only, right? Because you will get the benefit after some years from that investment. The deduction under section 80C is available only to an individual or HUF. Okay, so who are eligible assessee for claiming deduction under section 80C? Individual and HUF only. So the company, firm, LLP, AOP, BOI, they are not eligible to claim deduction under section 80C. The maximum permissible deduction under section 80C is 1,50,000. The statutory limit is 1,50,000. See, there are list of investments under section 80C. So if you are investing in three kind of investment, right? And the total of investment is 1,80,000. And the total investment amount is 1,80,000. Then what happens? You can claim deduction to the extent of 1,50,000 only. Why? Because 80C state that the maximum deduction available is 1,50,000 only. But if you are investing 1,00,000 rupees, then you can claim 1,00,000 rupees. The following are investment and contribution eligible for deduction. Contribution in unit link insurance plan 1971. See, this is the list. Okay, this is the list. So if you are investing in unit link insurance plan, then you are eligible to claim deduction. In case of an individual can make deduction for self, his or her spouse, and any child of individual. So if an individual make contribution of his parents in a unit link insurance plan, then is he eligible to claim deduction under section 80C? Yes or no? Say for example, Mr. X make an investment in unit link insurance plan in the name of his father. Can Mr. X is eligible to claim deduction under section 80C? Yes or no? Chalo, tell me yes or no. Yes or no, everyone? No, right? Why? Because individual can make investment for himself, his spouse, and his child. Okay, clear everyone? In case of HUF, the contribution can be made in the name of any member. Contribution in unit link insurance plan of LIC mutual fund. So if an individual make an investment in unit link insurance plan of LIC mutual fund for individual himself, his spouse, or any child, then he is eligible to claim deduction under section 80C. And in case of HUF, contribution can be made in the name of any member of HUF. Okay. The limit of 1,50,000 is for previous year, for particular previous year. No, the name is 1971. The ULIP is available here. The scheme is launched in 1971. Okay. Premium paid in respect of life insurance policy. My dear friend, it is very important. Life insurance policy. Premium paid on life insurance policy. See, in life insurance policy, you have to pay premium every year, and after the term of policy, and you will get the maturity amount. We will discuss both the taxability of maturity amount and the deduction of premium paid during the term of policy. Okay. Premium paid on insurance on life insurance on life of individual, spouse, or any child, minor or major, and in case of HUF, any member thereof. So, in this case also, if an individual paid life insurance premium of his or her parents, then he or she is not eligible to claim deduction under Section 80C. Why? Because 80C states that the deduction is available only in case when individual pay premium for him or herself, his or her spouse, or any child. Exemption on receipt from life insurance policy. This is important. Any sum received under life insurance policy, including the sum allocated by way of bonus on such policy, shall not be included in total income of person. Shall not be included in total income of person. का मतलब it is exempt. Okay. Section 1010D. Sneha, 80D is a separate section. It is for Mediclaim, not for life insurance premium. We will discuss after 80C, 80D. Okay. Yes, Ayush, you are correct. Clear, Sneha? We will discuss 80D. 80C deal with life insurance premium and 80D deal with Mediclaim. Now section 1010D deals with maturity amount. Okay, maturity amount. So what is maturity amount? Say for example, I'm taking policy of 15 years. Okay, so for 15 years policy, I have to pay premium of sum assured. Sum assured means minimum amount of payment you will receive at the time of maturity. Say for example, I will explain everything what is bonus amount. Just wait. Okay. So if I'm taking the policy of 15 years, then I have to pay premium for 15 years. Okay. And after completion of 15 years, say for example, in my policy, it is mentioned that okay, at the time of maturity, you will receive payment of 30 lakh rupees. You will receive payment of 30 lakh rupees. It is minimum amount I can get after my policy mature. Okay, so it is called as sum assured. It is called as sum assured. Sum assured means the minimum amount I will get from the insurance policy. Okay, over and above, say for example, if the LIC performs well, then the policy LIC will give the bonus to you. It is in term of monetary, right? So if you are getting 32, see the bonus, you will get the bonus amount of 2 lakh rupees. Okay, you know the bonus amount at the time of maturity. Okay? So if you will get extra amount, okay, then in that case, 32 lakh rupees you will receive. So it is maturity amount. Okay, So it 1010D deal with this taxability of this maturity amount. We are talking the maturity will received by the person who paid the premium. Okay. What happens if the policy amount is received by family member after the death of person, that we will discuss later. Okay. So here, if you receive 32 lakh rupees after 15 years, then what happened? This 32 lakh is exempt or not? So there are certain conditions in this table is given. Okay, so if you fulfill the condition, then in that case the maturity amount is exempt. And if you are not fulfilling the condition, then the maturity amount is taxable. Okay, and as I mentioned, you have to pay premium every year. So you can get deduction from your gross total income of this premium under section 80C. So let us discuss section 80C and 80D. In respect of policy issued before 1/4/2003. That means if you are taken policy before 1/4/2003. If you are taking policy before 1/4/2003. Then in that case, any sum received under LIC any sum received under a life insurance premium, including sum allocated by way of bonus, is exempt. In this case, if you are taking policy before 1/4/2003 and you will get the maturity amount, then the whole maturity amount is exempt. Then the whole maturity amount is exempt. The endowment plan list will be provided by the broker of LICs, depending on the what amount you are ready to pay as a premium. So, in this case, if you took policy before 1/4/2003, then whatever is your maturity amount, the maturity amount plus bonus, the whole amount is exempt. Okay. And what about the premium? You pay premium for certain years? Yes or no? Yes. So I have explained the meaning of actual capital sum assured. Sum assured means minimum amount you will receive after maturity. Minimum amount. Okay, it is mentioned in your policy that you will get this minimum amount after your policy end. So for maturity, you have to pay the premium every year. Yes or no? Yes. So you are eligible to claim deduction of premium paid under section 80C to the extent of 20%. To the extent of 20%. Say for example, my sum assured is 20 lakh. My sum assured is 20 lakh. Actual premium paid is 4,20,000. 4,20,000 and policy taken before 1st April 2003. Then what happened here? Then in this case, you have to check 20% of sum assured is equals to 4 lakh. Okay. So if policy taken before 1/4/2003, then you have to remember the maturity is wholly exempt and the premium paid is eligible for deduction under section 80C to the extent of 20% of sum assured. So in this case, actual premium is 4,20,000, but 20% of sum assured is 4 lakh. So this is eligible amount for 80C. But here, trigger point, 80C statutory limit. What is the statutory limit of 80C? What is statutory limit of 80C? 1,50,000. So you can claim deduction of 1,50,000. Clear? Okay, so whenever you receive this maturity amount, it is exempt under section 1010D. But during the term of policy, if you are paying premium, you have to pay premium. Okay, so the premium is eligible for deduction under section 80C to the extent of 20% of sum assured. In respect of policy issued between 1/4/2003 and 31st March 2012, if you are taking policy after 1st April 2003, okay, on or after 1st April 2003, but before 31st March 2012, then in that case, you are eligible to claim deduction of premium paid to the extent of 20%, same, to the extent of 20%. But maturity amount is exempt. Maturity amount, any sum received under a life insurance, including the sum allocated by way of bonus, is exempt. However, exemption would not be available if the premium payable for any of the year during the term of policy exceed 20% of actual capital sum assured. Sumesh, you cannot claim deduction of excess amount in next year, because for next year you will pay the premium for next year as well. Okay, you cannot claim deduction for payment of premium for next excess premium for next year in next year. Okay, so here the exemption is not available when your premium is more than 20% of your sum assured. Say for example, sum assured is equals to 10 lakh rupees. Okay, sum assured is 10 lakh rupees and actual premium two lakh 10,000. Actual premium is 2 lakh 10,000. So in this case, in ATC, I am eligible to claim deduction of 2 lakh rupees. Statutory limit is 1 lakh 50. Okay, but to the extent of 20%. But for exemption under section 1010D, whenever I receive the maturity amount, my actual premium, see, 20% of sum assured is equals to 2 lakh rupees. So in this case, my actual premium is more than 20% of sum assured, yes or no? In this case, my actual premium is more than 20% of sum assured, yes or no everyone? Yes or no? Right? So in this case, yes, my actual premium is more than 20% of sum assured. So in this case, the maturity amount is not exempt and it is taxable in the year it is received. Clear everyone? Clear with this point and this point? Yes or no? Sorry, not this. This is pending. This and this. Right? So what happened here in case if you are taking policy after 1/4/2003 but before 31st March 2012, then if your premium is more than 20% of sum assured, then the maturity is not exempt. But if your premium is less than 20% of sum assured, then the maturity is exempt. Say for example, here the premium amount is 1,50,000 only. Here the actual premium is 1,50,000 only. So it is less than, it is less than 20% of sum assured, Yes. So in that case, this amount 10 lakh rupees whenever I receive at the time of maturity, it is exempt. Clear? You can claim deduction under section ETC up to 1,50,000 only, because the statutory limit is 1,50,000 under section ETC. Clear, everyone? See, a whole amount is taxable, including bonus, if your premium is more than 20% of sum assured. Full amount is taxable. You get the concept? Yes or no? Then the remaining point is very easy for you. Yes or no, everyone? So next is, in respect of policy issued on or after 1st April 2012, but before 1/4/2013. Okay. So in this case, now it is very simple. You know the concept. In this case, under ATC, under section ATC, to the extent of 10% of sum assured, the premium is eligible. Say for example, my sum assured is 10 lakh rupees. Actual premium is 90,000. 10% of sum assured is 1 lakh rupees, right? 10% of 10 lakh. So it is 1 lakh. So my actual premium is less than 10% of sum assured. Yes or no? Yes. So in this case, I can claim 90,000 as deduction under section ATC. and whenever I receive the maturity amount, including bonus, then the full amount is exempt. Why? Because my premium is less than 10% of sum assured. But say for example, my actual premium is 1,10,000. Then what happened? Then in this case, if my actual premium is more than 10% of sum assured, then I can claim deduction under section ATC for premium to the extent of 10% of sum assured. That means I am eligible to claim deduction under section ATC of rupees 1 lakh only. That is 10% of sum assured. Okay. If my actual premium is 1,10,000, then I am eligible to claim deduction under section ATC 1 lakh rupees only. That is 10% of sum assured. And my actual premium paid is more than 10% of sum assured. Yes or no? My actual premium paid is more than 10% of sum assured. Yes. Then in that case, the whole maturity, full maturity is taxable, including bonus. Surya, the second point is same as the third point, but the only difference is in third point the rate of premium is 10%, and in second point it is 20%. You will get everyone? Yes or no? If the policy taken after 1/4/2012 but before 1/4/2013, then under section ATC, to the extent of 10% of sum assured, the premium is eligible for deduction. If my premium is less than 10% of sum assured, then in that case, the full maturity amount, including bonus, is exempt. But if my premium is more than 10% of sum assured, then the full maturity amount, including bonus, is taxable. Clear, everyone? Chalo. What happened in respect of policy issued on or after 1/4/2013? If policy issued after 1/4/2013, then in that case, where the insurance is on life of person with disability or severe disability as referred to in section 80U, or person suffering from disease or ailment as specified under section 80DD. The amendment is applicable before 2-3 years. Okay, it was not there earlier. This is applicable with effect from 2019, 18 or 19. So if you take policy on or after 1/4/2013 and the policy is taken on a person who is disabled or who suffer with disease. Okay, that what kind of disability is given under section 80U that we will discuss, and the list of disease also given in section 80BB that we will discuss later in this chapter. Okay, but for as of now, you have to remember if the policy is taken on life of person with disability or suffering from disease, then in that case, if you are paying premium, then to the extent of 15% of capital sum assured, 15% of sum assured is eligible for deduction under section 80C. Say for example, the policy sum assured is 10 lakh. Actual premium is 1,20,000. 15% of sum assured is 1,50,000. Then this 1,20,000 full is eligible for deduction under section 80C. Why? Because actual premium is less than 15% of sum assured. And the majority amount is exempt. Why exempt? Because the premium is less than 15% of sum assured. Okay. Now say for example, my actual premium is 1,80,000. Then in that case, I am eligible to claim deduction under section 80C for premium only to the extent of 1,50,000. That is 15% of sum assured. And in this case, the maturity amount is taxable. Preeti, the difference between two sections is 80C deal with the premium amount. See, you have to pay premium for the term of policy, and 1010D deal with the maturity amount that you will get after the maturity of policy or after completion of year of policy. Clear? Section 80C deal with the premium paid by you for the policy, and 1010D deal with the maturity amount received by you at the time of maturity. Okay, Preeti? Clear? So everyone clear with this? 80, if your policy taken after 1/4/2013 and the policy is in the for the person who suffer with disability or from disease, specified disease, then in that case, to the extent of 15% of sum assured, the premium is eligible for 80C. And if the premium is 15%, or less, then the full maturity amount is exempt. And if the premium is more than 15%, then the full maturity amount is taxable. Any sum received under life insurance policy, including sum allocated by way of bonus, is exempt. However, exemption would not be available if premium payable for any of the year during the term of policy exceed 15% of actual sum assured. Here the meaning of see, Somesh, the premium you have to pay for certain amount in LIC. There is a condition that, say for example, I am paying premium for 10 years, then after 15 years I'll get the maturity. Okay, so you have to pay premium for certain years. And in the same year, if you pay premium and receive the maturity amount, then in that case, the premium amount is eligible for deduction under section 80C and maturity is eligible for exemption under section 1010D if the conditions are fulfilled. See, both are different sections. 80C deal with premium and 1010D deal with maturity amount. So here the meaning of sum assured is given. The minimum capital sum assured under the policy on happening of insured event at any time during the term of policy, not taking into account the value of any premium agreed to be returned or any benefit by way of bonus or otherwise over and above the sum actually assured, which is to be or may be received under the policy by any person. So the sum assured means the minimum amount you will get. Okay. So for sum assured, you have to ignore the bonus amount, the additional amount, whatever you will receive. You have to focus on sum assured. The payment mode is other than cash. Where the insurance is on life of any person other than mentioned in A above. So here the provision is for normal person who are not suffering from disability or any disease. For normal person, if the policy taken on or after 1/4/2013, on or after 1/4/2013, then in that case, under section 80C, premium to the extent of 10% of sum assured is eligible for deduction. Okay, and the amount of maturity is exempt if the premium is less than or equal to 10% of sum assured, and the maturity is taxable if the premium is more than 10% of sum assured. It is same as we discussed here in this example. Okay, everyone. So clear with this? Yes or no? Everyone clear with this? If you will reply, then only I came to know that you understand. Yes or no? Great. Done. The notes, this is amendment, but it is not applicable in November attempt. जो notes है, this is amendment and it is not applicable in November attempt. But I'll just explain you in brief that if you are taking high premium policy, that is unit link insurance policy, see Jyoti, the thing is majority amount include bonus. Okay, so if the majority is taxable, then the bonus is also taxable. If majority is exempt, then the bonus is exempt. Point A deal with those person. Say for example, Mr. X son is handicapped. Okay, and he is suffering from disability. Then in that case, the premium paid for son's policy, 15% of actual sum assured is eligible. Okay. Then the policy is converted for disability, Himanshu. See, in first case, the policy is taken before 2003, then under ATC to the extent of 20% of premium paid is eligible for deduction and the maturity is exempt. In second point, policy taken after 1/4/2003 but on or before 31st March 2012. then in that case also premium paid to the extent of 20% of sum assured is eligible for deduction. And if the premium is less than or equal to 20% of sum assured, then the maturity is exempt. And if the premium is more than 20%, then the maturity is taxable. Clear, Pooja? Same is applicable, only the percentage will change. So this amendment is applicable with effect from 1st Feb 2021, but this is not applicable in your syllabus. In this case, if you are taking unit link insurance premium, insurance policy, and your premium is 2,50,000 or more, and your premium is 2,50,000 or more, then in that case, whatever amount you will receive at the time of maturity, the full amount is taxable. The amendment says that. Okay, but it is not applicable in your syllabus. So next is exemption is not available in respect of amount received from an insurance policy taken for disabled person under section 80DD. Any sum received under section 80DD3, subsection 3, both are same. Actual sum assured and minimum capital sum assured same. You will get minimum amount is sum assured. Section 80DD3 says that, say for example, if you are taking LIC of disabled person, Mr. X, yes, Pooja. Yes, after 1/4/2013. Before 1/4/2013, there is no differentiation of a normal person and disabled person. Same for everyone. After 1/4/2013, there is difference that 15% of sum assured in case of disabled person and 10% of sum assured in case of normal person. So here Mr. X and son of Mr. X, he is disabled. Right? So here if the premium on life insurance of son, if it is less than 15%, then the maturity is exempt. But say for example, the son of Mr. X died, and after that the policy get mature and Mr. X will receive the payment. Then in that case, exemption is not available. Exemption is not. Any sum received under section 80DD3 shall not be exempt under section 1010D. Accordingly, if the dependent disabled, in respect of whom an individual or the member of HUF has paid or deposited any amount in scheme of LIC. In our case, Mr. X deposited the amount of premium in for his dependent child who is disabled. Yes or no? Yes. Or any other insurer predeceased the individual or the member of HUF. That means the son of Mr. X died before Mr. X. And in that case, the amount so paid or deposited shall be deemed to be income of assessee of the previous year in which the amount is received. Such amount would not be exempted under section 1010D. Okay, so son of Mr. X died before Mr. X and Mr. X get the maturity amount, then in that case, the amount is taxable. Here it is. There is one doubt earlier that what if the amount is received at the time of or at the event of death of insured person. Okay, then in that case the nominee will get the amount, so the amount is exempt. Okay, any sum received on death of person would not be included in total income of person. In that case, you should not check the condition of 10%, 15% or 20% of sum assured. Okay, if a person died and his nominee will receive the payment, then in that case the whole amount is exempt. In that case, you should not check the condition of if the premium is 10% more than 10% of sum assured or not. Clear? So next is exemption is not available in respect of sum received under Keyman insurance policy. Okay. So if you are receiving majority amount of Keyman insurance policy, then section 1010D is not applicable and it is not exempt. The majority amount is taxable only. Any sum received under Keyman insurance policy shall not be exempt. Explanation 1 to section 1010 define the meaning of Keyman insurance policy. In case of spouse, it is dependent or not, it is not relevant. Keyman insurance policy is a life insurance policy taken by one person on life of another person who was the employee of first mentioned person. Say for example, see the Keyman insurance policy taken by employer in the name of employees. Okay? Or he or was connected in any manner whatsoever with the business of first mentioned person. The term include within its scope a Keyman insurance policy which has been assigned to any person during its term with or without consideration. Therefore, such policy shall continue to be treated as Keyman insurance policy even after the same is assigned to the Keyman. Consequently, sum received by Keyman on such policy being Keyman insurance policy would not be exempt under section 1010D. Here what you have to remember is any amount received under Keyman insurance policy is not exempt under section 1010D. Okay. So let us discuss the illustration number 2. Everyone, ready with your answer? Okay. Compute the eligible deduction under section 80C for AY 22-23 in respect of life insurance premium paid by Mr. Ganesh during previous year 21-22. Date of issue of policy 30th March 2012. Insured person कौन है? Mr. Ganesh खुद. Actual capital sum assured is 6 lakh rupees and insurance premium paid for previous year 21-22 is 51,000. Chalo everyone. Policy taken after 1/4/2012. Sorry. The case is covered here. Okay, in here. Because the policy taken on 30th March 2012, that is before 31st March 2012, right? So in this case, to the extent of 20% of sum assured is eligible for deduction under section 80C. So here the sum assured is 6 lakh rupees. What is 20% of 6 lakh? Everyone, what is 20% of 6 lakh? 1,20,000? Yes or no? Yes. Whether my premium is less than 1,20,000 or not, it is less than 1,20,000, right? So for ATC, full 51,000 is eligible. Okay. Now in case of spouse, date of policy is 1/5/2017, yani after 1/4/2013. In case of policy taken after 1/4/2013, in case of policy taken after 1/4/2013, ATC के लिए क्या था? To the extent of 10% of sum assured is eligible for deduction under section 80C. So what is my sum assured? Sum assured is 1,50,000 into 10%. It comes to 15,000. See, मेमन यहाँ पे मेच्योरिटी अमाउंट टैक्सेबिलिटी की बात नहीं हो रही है. यहाँ पे what they have mentioned is अंडर सेक्शन 80C कहीं भी नहीं बोला कि उसने मेच्योरिटी रिसीव करी है. चलो, so my premium, actual premium is 20,000, but I am eligible for claiming deduction under section 80C to the extent of 15,000 only. Chalo, in third case, policy taken after 1/4/2013, but for handicap son, section 80U disability. So in this case, what you have to check, 4 lakh into 15%. So 15% of 4 lakh comes to 60,000. So my premium is more than 60,000. Yes or no? Yes. So I am eligible for deduction to the extent of 60,000 only. Okay. So total of eligible amount under section 80C is 51,000 plus 15,000 plus 60,000. So total comes to 1,26,000. Yes, in second case, we can claim deduction only up to 15,000 only because we have paid more premium, but the deduction is available only to the extent of 10% of sum assured. So we are eligible to claim deduction of 15,000 only. That is to the extent of 10% of sum assured. So I am eligible to claim deduction of under section 80C 1,26,000. Suppose here the amount is more than 1,50,000. Suppose here total amount is more than 1,50,000, then you are eligible to claim deduction under section 80C to the extent of 1,50,000 only. Why? Because the total permissible limit under section 80C is 1,50,000. But in our case, it is less than 1,50,000, so full amount is eligible for deduction under section 80C. Everyone clear with the provision of life insurance premium? It is very important, my dear friends, section 1010D and premium for 80C. Everyone clear with this? Yes or no? Just go through the illustration number 1, everyone, quickly, and give me the answer. Everyone is clear with this or not? Yes, deduction is available for premium payment, and the maturity amount is taxable or not, discussed in section 1010D. 80C deal with premium paid because it is your expense, it is your investment for policy. Here, Mahadev. Hitesh, Ayush, Sushil, Shraddha, clear? Pooja. Yes or no? So next is premium paid in respect of contract for deferred annuity. Premium paid to effect and keep in force for a contract for deferred annuity. Now, what is deferred annuity? In case of deferred annuity, it is for a retirement plan. You have to invest certain amount for certain years. Say, for example, 20 years. I am investing 10,000 rupees every year for 20 years. After 20 years, at the time of retirement, I will get the pension or I will get the certain annuity amount, not pension exactly, but say for example, for 20 years, I pay 20,000 per year. Okay. And now at the retirement age, say for example, at the age of 60, after the age of 60, I will get some lump sum amount every year or every quarter or every month. It is depending on the your policy. Okay. So in that case, if you are investing in this kind of contract for deferred annuity, so this the amount you invest is eligible for deduction. The amount you invest is eligible for deduction. This is for retirement benefit only, because after retirement you are not getting fixed salary income. Okay, so by way of this investment, you are making investment for 20 years, and after completion of 20 years, at the age of retirement, you will get certain amount from that investment. Clear, everyone? So if you are paying any amount for this kind of contract, then in that case, you are eligible for deduction under Section 80C for the premium paid. Premium paid to effect and keep in force a contract for deferred annuity on life of individual, his or her spouse or any child. See, you have to remember, my dear friend, individual, his or her spouse and child is covered only. Provided such contract does not contain any provision of for the exercise by insured of an option to receive cash payment in lieu of payment of annuity. It is pertinent to note here that contract for deferred annuity need not necessarily be with insurance company. It follows therefore that such a contract can be entered into with any person. It is not compulsory that you have to enter into such kind of contract with insurance company. You can enter with any company, any person. Okay. The fifth point is the same, but it is for government employee. In case of government employee, the amount is deducted from their salary and deposited in this deferred annuity account. And after retirement, they will get the annuity amount. Amount deducted by or on behalf of government from the salary of government employee in accordance with the condition of his service for securing deferred annuity or making provision for his spouse or children, the excess, if any, over 1/5 of salary is to be ignored. Say, for example, salary is 5 lakh rupees. So 1/5 of 5 lakh, 1 lakh rupees. So if the deposit of deferred annuity to the extent of 1 lakh is eligible, if the amount of investment is 1,20,000, then to the extent of 1 lakh is eligible for deduction under Section 80C. That is, over the 1/5 of salary is ignored for claiming deduction under Section 80C. Next is contribution to statutory provident fund, public provident fund, and recognized provident fund. Statutory provident fund and recognized provident fund is for employees, right? Statutory is for government, recognized is for other than government. You already know the type of provident fund and the contribution in provident fund in salary chapter. So if you are making any contribution to this provident fund, then the contribution made is eligible for deduction under Section 80C, whatever amount you invested. But I'm again repeating that the permissible limit of 1,50,000 under Section 80C you have to remember. Okay. Contribution to any provident fund to which Provident Fund Act 1925 apply and recognized provident fund qualify for deduction under Section 80C. Contribution made to any provident fund set up by central government and notified in his behalf also qualify for deduction under Section 80C. PPF is for everyone, whether salaried, non-salaried, everyone. You can deposit in your PPF account any amount, but such contribution can be made in the name of individual, spouse, or any child, or any member of family in case of HUL. But PPF mein, for year, you cannot deposit more than 1,50,000. In PPF account, Public Provident Fund account, you cannot deposit more than 1,50,000 in a year. The maximum limit for deposit in PPF is 1,50,000 in a year. So let us discuss illustration number 3. An individual assessee resident in India has made the following deposit or payment for previous year 21-22. Contribution to Public Provident Fund 1,50,000. Eligible for deduction under Section 80C? Yes. Insurance premium paid. It is for individual only, na? ATC is eligible for individual and HUF. Insurance premium paid on life of spouse policy taken on 1/4/2016. It is after 1/4/2013. Yes. So 2 lakh is sum assured. 10% of 2 lakh is 20,000. But the premium paid is 25,000. So to the extent of 10%, that is 20,000 is eligible for ATC. Yes or no? Yes. So what is my total ATC contribution? PPF 1,50,000 and insurance policy 20,000. Yes or no? It comes to 1,70,000. But maximum permissible limit for ATC is 1,50,000 only. So I am eligible to claim deduction to the extent of 1,50,000. Okay. So that's it, everyone. You have to calculate all the eligible amount, make the total, and then compare with 1,50,000 permissible limit. Clear, everyone? Just go through quickly. Just go through illustration number 3. Clear? With up to illustration number 3, everyone clear? Yes or no? Next is contribution to approved superannuation fund. Contribution by an employee to an approved superannuation fund qualify for deduction under Section 80. If you are an employee and you are contributing to superannuation fund, approved superannuation fund, then you are eligible for deduction. ETC is for employees only, na? Yes. Yes. 1/5 of salary is eligible for deferred annuity, not for LIC or PPF. It is for deferred annuity plan. ATC deal with employees' contribution to Provident fund, not employer. Employer's contribution is exempt to the extent of 12. Chalo. Any sum paid or deposited in Sukanya Samriddhi account. See, what is Sukanya Samriddhi account? It is for girl child. So if an individual deposit any amount in the name of his girl child in Sukanya Samriddhi account, then the amount is eligible for deduction. Subscription to any such security of central government or any such deposit scheme as central government has been notified in official gazette. Accordingly, no, there is no extent to superannuation. The permissible limit is 1,50,000. Sukanya Samriddhi scheme has been notified to provide that any sum paid or deposited during the previous year in the state scheme by an individual in the name of any girl child of individual or girl child for whom such individual is legal guardian would be eligible for deduction under Section 80C. Subscription to National Savings Certificate 8. It is the name of certificate. Okay. So if you are investing in National Savings Certificate 8, then the amount invested is eligible for deduction under Section 80C. Contribution to approved annuity plan of LIC. In case of annuity plan, you will receiving the amount after the term of policy. Contribution to approved annuity plan of LIC. That is New Jeevan Dhara. It is name of plans. New Jeevan Akshay, New Jeevan Dhara 1, New Jeevan Akshay 1, 2, 3, or any other insurer as the central government may, by notification in official gazette specified in this behalf. Okay, so if you are investing in annuity plan of LIC, then in that case, you will get the deduction under section 80C. Subscription toward notified unit of mutual fund or unit trust of India. So if you are investing in certain notified mutual fund or unit trust of India, then you will get deduction under section 80C of the investment amount. In this case, there are certain investment, the mutual fund have to take approval of government that to notify this investment as eligible for deduction under section 80C. Contribution to notified pension fund set up by mutual fund or UTI. Contribution by an individual to a pension fund set up by any mutual fund or any by the administrator or the specified company as the central government may notify. Okay. So if you are investing in pension fund of mutual fund, notified mutual fund or unit trust of India, then you will get the benefit. Now the specified company means the company registered under Companies Act 1956 or 2013 and whose entire capital is subscribed by financial institution or bank notified by the central government. Administrator means a person or body of person appointed by central government to manage the funds. And specified undertaking include all business asset, liability, property of trust, representing and relatable to scheme and development reserve. Subscription to National Housing Bank term deposit scheme. So if you are depositing your money, just like fixed deposit in National Housing Bank, term deposit means fixed deposit, right? So in that case, the amount deposited by you is eligible for deduction under section 80C, but you have to deposit to National Housing Bank. Subscription to notified schemes. See, government launched some certain schemes. Why? Because say for example, if a government want to develop certain village or town or city, then the government need the fund. Okay, so government launched some scheme that if you invest in certain such scheme and provide the fund to government, it is returnable, right? Say for example, if I'm in case one scheme, if I'm investing 5 lakh rupees, after 5 years I'll get back my money. Okay, so if you are investing in this kind of scheme launched by the government, then you are eligible for deduction under section 80C. Subscription to any such deposit scheme of public sector company which is engaged in providing long-term finance for construction or purchase of house in India for residential purpose, or any such deposit scheme of any authority constituted in India by or under any law enacted either for the purpose of dealing with or satisfying the need for housing accommodation. See, for example, Pradhan Mantri Awas Yojana, or for the purpose of planning, development or improvement of city, town, village or both. The scheme should be notified by central government. For example, public deposit scheme of HUDCO. National Housing Board, Housing Bank is one kind of bank that provide loan for housing projects. It is important, my dear friend, you can advise your parents for this deduction. Payment of tuition fee to any university, college, school or other educational institution within India for full-time education for maximum 2 children. यानी कि कोई भी parents if paying any tuition fee for their kids, maximum up to 2 children, right? So if they are paying any tuition fee, then they are eligible to claim reduction of such tuition fee under section 80C. But the fees should be paid in India. If you are paying fees outside India, then in that case, the majorities of all this are exempt. Then in that case, it is not eligible for deduction. Payment of tuition fee by an individual assessee at the time of admission or thereafter to any university, college, school or other educational institution within India. It is important, within India, for the purpose of full-time education of any two children of the individual. This benefit is only for the amount of tuition fees. So if you are giving any donation or any additional fees, then the deduction is not available. For full-time education and shall not include any payment towards development fee or donation or payment of similar nature and payment made for education to any institution situated outside. It is also important repayment of housing loan. Say for see, if you are taking housing loan, then for repayment you will pay every month installment, that is EMI. And there is two components of EMI. One is interest and another is principal. You can claim reduction of interest payment under section 24B. Income from house property, right? So you will get deduction of interest paid for loan taken for the purchase of house under the head income from house property. But what about principal? The principal payment is eligible for deduction under section 80C. Clear? Any payment made towards the cost of purchase tuition fee does not mean to private coaching center. It is for university, college, school. See, in college also there is mentioned that in the fee receipt, it is tuition fee, it is breakfast fees, it is development charges, it is donation, etc. Any payment towards the cost of purchase or construction of new residential house property, the income from such property should be chargeable to tax under the head income from house property. Would have been chargeable to tax under the head income from house property had it not been used for the assessee's own residence. So if you are let out your house property, then the rental income is taxable under the head income from house property. The approved type of payment are as follows. An installment or part of payment of amount due under any self-finance or other scheme of any development authority or housing board or other authority engaged in construction and sale of house property on ownership basis. So if you are paying installment to any board, housing board or any financial institution, then the principal component is eligible for deduction under section 80C. If you are paying any installment to cooperative society for acquiring the house, then also it is eligible. Repayment of amount towards central government? No, not eligible. Ucha, not eligible. Central government, state government, banking company, LIC से loan लिया वो, housing bank से loan लिया वो, it is all eligible if you are taking loan from approved public company. PSU. Okay, if you are taking loan from your employer for the purchase of house, then all the principal repayment is eligible for deduction under section 80C. Inadmissible payment क्या होता है? तो admission fee, cost of share और initial deposit यानी processing fees वगैरह. So they are not eligible for deduction under section 80C. And if you are making any renovation, alteration, okay, after acquiring house, for example, interior, then this interior etc. is not eligible for deduction. Subscription to certain equity share and debenture. Subscription to equity share or debenture forming part of any eligible issue of capital approved by the board. Any CBDT approve करेगा वो. If the certain issue of shares are approved by the central board of directors, then if you are subscribing such equity share or debenture, then the investment made by you is eligible for deduction under section 80C. And there is lock-in period of 3 years. You cannot sell this share before 3 years. If you are selling this share before 3 years, then the whatever amount you claim as deduction under section 80C is taxable in the year in which you transfer the share to other person as your income. Okay, so say for example, I am acquiring such equity share in previous year 21-22 for 1 lakh rupees. So I am claiming deduction from my gross total income for in previous year 21-22. Now in previous year 22-23, I will sell such shares. So in this case, in earlier year, 1 lakh is my deduction, yes or no? Yes. So in subsequent year, 1 lakh is treated as my income. Why? Because there is lock-in period of 3 years. I cannot sell equity share before 3 years. But if I sell this such share before the expiry of 3 years, then in that case, whatever amount of deduction I claim earlier, the same deduction is treated as income in the year in which I transferred such share. Subscription to certain unit of mutual funds. Subscription to any unit of mutual, say for example, ELSS. Okay, the mutual fund have to take approval that it is the investment in such mutual funds are exempt from board. Subscription to any unit of any mutual fund and approved by the board on an application made by such mutual fund in prescribed form, it is necessary that such unit should be subscribed only in the eligible issue of capital of any company. Investment in 5-year term deposit. If you are making fixed deposit of 5 years in scheduled bank, nationalized bank, then in that case, you are eligible for deduction under section 80C for that fixed deposit amount. But the minimum period for fixed deposit is 5 years. The minimum period for fixed deposit is 5 years. Investment in term deposit for a period of not less than 5 years with a scheduled bank and not less than 5 years. Yani you have to deposit for 5 years, minimum 5 years. And for which it is in accordance with the scheme frame and notified by the central government in official gazette, qualify as an eligible investment for availing deduction under section 80C. The maximum limit for investment in term deposit is 1 lakh. You can invest in any scheduled bank, say for example SBI, subsidiary of SBI, any banking company to which Banking Act apply, and any other bank which is covered under second schedule to Reserve Bank of India Act 1930. Subscription to notified bond issued by Nabard. If you are investing in any bond of Nabard, then also the investment amount is eligible for deduction under section 80C. Earlier, in this, it is fixed deposit in bank. This is fixed deposit in post office. So if you are depositing any amount in fixed deposit in post office for 5 years, then you are eligible for 80C. Same way, it is senior citizen savings scheme. It is for senior citizen only. One kind of fixed deposit. Okay, so if you are investing in senior citizen savings scheme, then also you are eligible for deduction under section 80C. Contribution to additional account under NPS. Contribution to additional account under NPS. It is important. The word is additional account. Normal NPS we will discuss in section 80CCD. Yes, Ayush. Small finance bank are not covered. Otherwise, mostly bank are covered under second schedule. Contribution by central government employee. See, point number 23 is applicable to central government employee. To additional account under NPS. This is the name of account, additional account NPS. Referred to in section 80 CCD for a fixed period of not less than 3 years and which is in accordance with the scheme notified by central government for this purpose qualify for deduction under section 80C. It may be noted that only the contribution to additional account under NPS will qualify for deduction under section 80C. So additional account may cover employee of central government deposit any amount, then they are eligible for deduction under section 80C. It is only for central government employee. It may be noted that only the contribution to the additional account under NPS will qualify for deduction under section 80C. There are two types of NPS account, tier 1 and tier 2, to which an individual can contribute. Section 80 CCD that we will discuss after 80C provide deduction in respect of contribution to individual pension fund account, that is tier 1 account under NPS. Whereas deduction under section 80C is allowable in respect of contribution by central government employee to additional account, that is tier 2 account of NPS. So if you are central government employee and you are depositing any amount to tier 2 account, then you are eligible for deduction under section 80C. Otherwise, you are eligible for deduction under section 80 CCD that we will discuss. Thus, tier 2 account is additional account under NPS contribution to which would qualify for deduction under section 80C only in the hand of central government. This is important. Termination of life insurance policy or unit-linked insurance plan or transfer of house property or withdrawal of deposit. See, we have discussed that if you are making a deposit of 5 years or if you are repaying the loan of house property or if you are taking life insurance policy or unit-linked insurance plan, then you are eligible for claiming deduction under section 80C. Now this point deal with what if you will sell your house. So if before 5 years of acquiring house, if you transfer the house, say for example, Mr. X purchase house in previous year 21-22. Okay. In previous year 21-22, he claimed deduction under section 80C for repayment of principal amount of housing loan, say for example 1,20,000. In previous year 22-23, he claimed deduction of 1,50,000. In previous year 23-24, he transferred the house, yani sold the house. So before 5 years, he sold the house, yes or no? Yes. Then in that case, earlier he claimed total deduction of 2,25,000, right? 1,20,000 in previous year 21-22 and 1,15,000. It is 1,15,000. Okay. In previous year 22-23. So total he claimed deduction of 1,35,000. 2,35,000, right? And previous year 22-23, that is before 5 years of loan, he sold the property. So this 2,35,000 amount is chargeable as income in previous year 23-24. Okay. If he sold such house after 5 years, then this is not applicable. But before 5 years, if he sold the house, then whatever amount of deduction he claimed in earlier previous year, that is taxable as income in the previous year in which the house property is transferred. Same way, fixed deposit. If you are claiming 1,50,000 deduction for a fixed deposit of 5 years, and before 5 years, if you withdraw the money from fixed deposit account, then in that case, the deduction claim The deduction claim is treated as your income in the year in which you withdraw the fixed deposit. Same way, insurance policy, if is in case of single premium policy, you have to pay premium only for 1 year. Then within 2 years after the commencement of policy, you close the policy. Then in that case, the deduction claim is taxable in the year you close the policy. And in any other case, before expiry of 2 years, you have not paid premium. And in that case, the deduction claim by you in earlier year is taxable as income. Clear? So this is lock-in period that you have to deposit certain amount for some years, minimum years. Otherwise, what happened? In this year, I will take benefit of reduction. Next year, I will transfer the property or I will withdraw the fixed deposit. Okay. So there is misuse of deduction. Therefore, there is lock-in period. Clear, everyone? Just go through up to section 80C. And if you are having any doubt, just let me know. After that, we will discuss section 80CCC. Everyone clear with this? Yes or no? Answer everyone. Otherwise, मुझे पता नहीं चलेगा आपको समझ में आया कि नहीं. Yes, you can claim deduction up to 1,50,000 under section 80C every year, provided you are investing in this kind of investment every year. If you are not investing, then you are not eligible to claim deduction. But yes, if you are investing, then you are eligible for deduction under section 80C 1,50,000 every year. चले next section पे? Yes or no? चलो. Next is yes, mutual fund investment is allowed, but whenever you are investing in mutual fund, you have to ask your broker that I want to invest in that mutual fund to which deduction under section 80C is eligible. This investment is mostly equity-oriented mutual funds. Okay, the approval is taken by mutual fund company that our whatever amount is invested by investor in our company, then it is eligible for deduction under section 80C. So the mutual fund will take the approval from the Central Board of Directors, and you will get the see whatever the mutual fund you want to invest. Just Google it the name and search that is it eligible for deduction under section 80C. Yes, yes. Okay. Okay, chalo. We will take 10-minute break. After that, we will discuss new section, 80C. Okay. Okay. Hello. Next is section 80CCC. Deduction in respect of contribution to certain pension fund. Eligible assessee. Where an assessee being an individual. So the thing is 80CCC is available only to an individual. Okay. As in the previous year, paid or deposited any amount out of his income chargeable to tax to effect or keep in force for a contract for any annuity plan of LIC of India or any other insurer for receiving pension from funds set up by LIC or such other insurer, he shall be allowed a deduction in computation of his total income. So if you are investing in any plan of LIC, any annuity plan of LIC, then you are eligible to claim deduction under section 80CCC. If you are taking, see, we have discussed in 80C also the annuity plan of LIC. So if you are claiming deduction under section 80CCC, then you cannot claim deduction under section 80C. It is important, my dear friend, you have to remember this. Maximum permissible deduction is 1,50,000. This paragraph is very important. The overall limit of 1,50,000 prescribed in section 80CCE will continue to be applicable. That is, maximum permissible deduction under section 80C, 80CCD1 and 80CCC put together is 1,50,000. Say for example, if you are investing under section 80C, 1,20,000. Under section 80CCC, that is LIC annuity plan, 50,000. Here the permissible limit is 1,50,000, 1,20,000 is eligible. Here also the permissible limit is 1,50,000, 50 is eligible. Now you are investing 80CCD1, that we will discuss. Here you are investing 20,000. It is permissible. Say for example. So my total investment is 120 plus 50, 170 plus 180. My total investment of this three section is 1,80,000. But now the section 80CCE state that the deduction of all this section in aggregate does not exceed 1,50,000. So in this case, my cumulative deduction of this three section does not exceed 1,50,000. So I am eligible to claim deduction only to the extent of 1,50,000 from my gross total income. Here, so 80CCE state that deduction under section 80C, 80CCC and 80CCD subsection 1 in aggregate does not exceed 1,50,000. Okay. Deemed income. Whenever you receive the amount, whenever you start receiving amount from this LIC annuity, then such annuity is taxable as your income in the year in which you receive the amount. Yeah, 30,000 will not be available. 1,80,000 is total, 1,50,000 is eligible, so the balance 30 is not available. Okay, so let us discuss section 80CCD. Deduction in respect of contribution to pension scheme notified by central government. As per the restructured defined contribution pension system applicable to new entrants to government service, it is mandatory for person entering the service of central government on or after 1st January. Can you explain about termination of insurance policy? If you terminate insurance policy before 2 years, then whatever amount you claim as deduction under section 80C as premium paid for insurance policy, that is taxable as your income in the year in which you terminate the insurance policy. Clear? This is for pension scheme. See, before 1/1/2004, any person is an employee of central government, then he will receive the pension after retirement. But after 1st January 2004, the government notified new rules and state that the employee of government is required to contribute 10% of their salary every month towards their pension account. Every month toward this pension account. Say for example, the salary is 15,000 per month. So in case of central government employee, you have to contribute 1,500 to your pension account every month. That is 10% of salary. A matching contribution is required to be made by central government to state account. Same amount will contribute by central government in this account. The benefit of this scheme is also available to individual employed by any other employer as well as to self-employed individual. So if you are employed by other employer, that is other than central government, then also you can contribute to your pension account. And even if you are self-employed, then also you can contribute to pension account. This pension account is available in a nationalized bank. Okay, you have to open the account just like your saving account. Deduction under section 80 CCD is available if you are the notified pension scheme is Atal Pension Yojana. If you are depositing any amount in this pension account, but there is quantum of deduction, you can contribute any amount, okay, but the deduction is eligible is mentioned here. Section 80 CCD 1 provide a deduction for the amount paid or deposited by an employee in his pension account subject to maximum of 10% of his salary. Here the meaning of salary is basic salary plus dearness allowance forming part of retirement benefit. So under 80 CCD, what is your eligible deduction? Employee's contribution, right? Employee. So say for example, my actual contribution is 1,20,000. Yes, obviously there is, in case of self-employed, there is no employer, so there is no matching contribution. Now my salary for this purpose, yani ki basic plus dearness allowance forming part of retirement benefit is 10 lakh rupees. Okay, what I deposited actual amount is 1,20,000. So 10% of salary is equals to 1 lakh. So under 80 CCD subsection 1, I am eligible to claim deduction of rupees 1 lakh. I am eligible to claim deduction of rupees 1 lakh. That is to the extent of 10% of my salary. The deduction in case of self-employed individual would be restricted to 20% of his gross total income. In case of self-employed, there is no salary income. So in that case, gross total income ka 20%. See the chart. An individual employed by central government on or after 1/4/2004 or individual employed by any other employee, maximum deduction is 10% of salary. And in other individual, that means self-employed, 20% of gross total income. 80 CCD subsection 1B provides for an additional deduction up to 50,000 in respect of whole amount paid or deposited by an individual assessee under NPS in the previous year, whether or not any deduction is allowed under section 80 CCD subsection 1. So NPS ka deduction you can claim in two sections, 80 CCD subsection 1 and 80 CCD subsection 1B. Employees contribution, I am talking about employees contribution only. Okay, So under section 80 CCD 1B, you can claim reduction up to 50,000 rupees additional. Say for example, my salary is 20 lakh rupees and 10% of salary is 2 lakh and I deposited 2 lakh rupees in NPS account. So what happened? I can claim reduction of 1 lakh 50 because as per 80 CCD subsection 1, you cannot claim more than 1 lakh 50. The permissible limit is there. Right? 80C, 80 CCC and CCD subsection 1 is not more than 1 lakh 50. And so here 1 lakh 50 I can claim under section 80 CCD subsection 1. Okay, and remaining 50,000 I can claim under section 80 CCD subsection 1B because subsection 1B gives me an additional deduction of 50,000 rupees. Is that clear? No, tier 2 is not allowable. It is only eligible for 80C. Tier 2 is eligible under 80C only, not 80 CCD1. And even other than government employee, you cannot allow to contribute in a tier 2 capital. Here everyone. Whereas the deduction of under section 80 CCD subsection 1 is subject to overall limit of 1.5 lakh. Under section 80 CC that we have already discussed that the total of 3 sections 80C, 80 CCD and 80 CCC cannot exceed 1,50,000. Now section 80 CCD subsection 2 deal with employer's contribution. Section 80 CC subsection 2. 80 CCD subsection 2 deals with employer's contribution. Okay. Contribution made by central government or any other employer in respect of previous year to the said account of an assessee is allowed as deduction in computation of total income of assessee. So what happened here, my dear friend, as you have already studied in salary chapter that the contribution in NPS by NPS, the contribution of employer's contribution in NPS account is taxable as perquisite. So what happened? What you have to do? You have to add employer's contribution to NPS. First, you have to add employer's contribution to NPS in your salary income. What happened? First, you have to add employer's contribution to NPS in your salary income. After that, from gross total income, you have to deduct employer's contribution to NPS. Okay. So first, the entire employer contribution would be included in the salary of employee. First, you have to add the total contribution made by employer in your NPS account. However, deduction under section 80 CCD subsection 2 would be restricted to 14% of salary in case of contribution by central government and 10% of salary in case of contribution by any other employer. Now what happened here? Again, my salary is 10 lakh. Okay, for the purpose of NPS, that is basic salary plus DA forming part of retirement benefit. Now my employer contribute 1,15,000 to my NPS account. So what I have to do? I have to add this 1,15,000 in my salary income. Then from gross total income to the extent of 10% of salary. Why? Because in case of government employee, it is 14% of salary, and other than government, it is 10% of salary. So from my gross total income, I will reduce deduction under section 80C(c)(d) subsection 2 of rupees 1 lakh only. Why 1 lakh? It is 10% of. Clear everyone? So what you have to do, first you have to add your employer's contribution in your salary, and then from your gross total income you have to reduce 10% of salary as employer's contribution. Say for example my employer contribute 90,000 only, then what happen? I have to add 90,000 and reduce 90,000 from my gross total income. Why? Because 90,000 is less than 10% of salary. Clear everyone? The limit of 1,50,000 under section 80CCE does not apply to employer's contribution. Why? Because 80CCE 1,50,000 limit is applicable to section 80C, section 80CCC and section 80CC D subsection 1 only. Right? Yes or no everyone? इसका आपको वापस से डिडक्शन अंडर सेक्शन 80C नहीं मिलेगा. Right? Clear? Yes or no? Everyone, yes or no? Only one student is studying, yes or no? No, right? Teja, Ayush, Jimil. Clear? Yes or no? Pooja, Somesh. Tell me everyone, yes or no, so that I can move further. Next is deemed income. Whenever you close the account or whenever you're opting out of the scheme or whenever you receive the pension from your annuity plan, then this all income is taxable as in when you receive the amount. Okay? The amount standing to the credit of assessee in pension account for which deduction has already been claimed by under this section, and accretion to such account shall be taxed as income in the year in which such amount are received by the assessee or his nominee on closure of account or his opting out of state scheme or receipt of pension from the annuity plan purchased or taken on such closure or opting out. However, the amount received by nominee on the death of assessee under circumstances referred to in A and B above shall not be deemed to be income of nominee. यानी कि जिस पर्सन का पॉलिसी है उसकी डेथ हो गई, then in that case whatever amount is received by his nominee on the closure of account or the opting out of scheme, then the income is not taxable in the hand of nominee. Further, the assessee shall be deemed not to have received any amount in the previous year if such amount is used for purchasing annuity plan in the same previous year. Now there is some exemption is given. If on account of closure, if on closure of account or opting out of scheme, if you are withdrawing amount and the amount does not exceed 60% of your total amount in the account. Say for example, in my account there is 10 lakh rupees and I am withdrawing only 6 lakh rupees or 5,50,000. So the amount is less than 60% of total amount. Yes or no? Yes. Then the amount withdrawn by me, that is 5,50,000, is exempt. But the amount is 7 lakh, then to the extent 60% it is exempt, remaining is taxable. Okay. If you are withdrawing partial amount, then to the extent of 25% it is exempt. Okay. Chalo. The summary is given here. Limit on reduction under section 80C, CCC and CCD1, section 80CCE. That we have already discussed that. See, total of all this section 80C, CCC, 1,50,000, right? After that, 80 CCD 1B, you will get reduction of additional 50,000, that employees contribution to NPS. After that, 80 CCD 2, employers contribution, 10% of salary in case of non-government employee and 14% of salary in case of government, right? Chalo, just go through this chart. I'll give you 1 minute. After that, we will discuss illustration number 4. And if you are having any doubt, just let me know. I'll give you 1 minute. Just go through this chart. We have discussed all this section in detail. Just go through this chart. If you have any query, then just let me know. I'll explain it. And after that, we will discuss illustration number 4. And if you are clear with these points, then let me know that you are clear. Everyone clear with this, yes or no? Just let me know. Okay. Ayush cleared. Teja, Chaman, Pooja, Sumesh, Anupriya, Himanshu, Jyoti. Clear or not? Hello. Next, illustration number 4. We will discuss illustration number 4. The basic salary of Mr. A is 1 lakh rupees per month. So what is basic salary for year? ₹12 lakh rupees. He is entitled to dearness allowance, which is 40% of basic salary. So 40% of this, it is dearness allowance. So 40% of 12 lakh is 4,80,000, right? So his salary income is 16,80,000. 50% of dearness allowance form part of pay for retirement benefit. So salary for the purpose of section 80 CCD1 is 10 lakh rupees basic salary plus dearness allowance forming part of retirement benefit, right? So what is forming part of retirement benefit? 50% of dearness allowance. So 50% of 4,80,000. It is 2,40,000. So salary for section 80 CCD is 14,40,000. Clear everyone? Now what happened? Both Mr. A and employer ABC contribute 15% of basic salary to pension fund referred to in 80 CCD 1. Explain the tax treatment in respect of such contribution. Now, what is the contribution by Mr. A? Mr. A contribute 15%, yani 1,50,000 of basic salary. Okay, we will discuss in English only. So the contribution of Mr. A is 1,50,000. How 1,50,000? Basic salary is sorry, 1,50,000, not 1,50,000, 12 lakh into 15%. So what is 15% of 12 lakh? It is 1,80,000. Okay, so contribution by Mr. A is 1,80,000 and contribution by ABC Limited, the employer of Mr. A, is also 1,80,000 because in question it is given that Mr. A and ABC Limited contribute 15% of basic salary to NPS, right? So now, in case of Mr. A, what happened? Under section 80 CCD1, he is eligible to claim deduction only up to 10% of basic salary, right? So what is 10% of basic, 10% of salary? So salary for section 80 CCD1 is 14,40,000. That is basic salary. It is 12 lakh, sorry. By mistake, it was written as 12 lakh, 10 lakh. 1 lakh rupees per month, so 12 lakh rupees for 12 months, basic salary plus the earnest allowance forming part of retirement benefit. So 14,40,000. So he can claim deduction up to 1,44,000 under section 80 CCD subsection 1. Is that clear, everyone? Under section 80 CCD subsection 1, Mr. A can claim deduction up to 1,44,000. Now, we have discussed on section 80 CCD 1B, which gives additional deduction of 50,000 for employees' contribution to NPS account. Yes or no? Additional contribution of 50,000 to employees' contribution in NPS account. So, our total contribution is 1,80,000. From this, 1,44,000 is eligible for under section 80 CCD 1. Yes or no? Yes. So remaining 36,000. It is less than 50? Yes. So remaining 36 employees contribution we can claim under section 80 CCD subsection 1B. Right? Yes or no? Everyone clear with employees contribution to Provident Fund? Everyone clear with employees contribution? Aishwarya, are you clear with employees contribution to Provident Fund? Or alternatively, you can claim deduction under section 80 CCD 1B 50,000 and 80 CCD 1,30,000. Because the limit of 80 CCD 1 maximum is 1,44,000. Clear? Aishwarya, yes or no? Just let me know na, so that I can understand you're clear or not. Anyone having doubt in employees contribution? For employer contribution, also it is restricted to 10% of salary. Yes or no? Yes. So what you have to do, what is employer's contribution? 1,80,000. First, you have to add 1,80,000 in your salary income, right? And after that, under section 80 CCD subsection 2, you can claim deduction of 1,44,000 is employer's contribution to NPS account. How 1,44,000? 14,40,000 is salary for the purpose of section 80 CCD. So 10% of salary. 14,40,000 into 10%. It comes to 1,44,000. Clear everyone? Clear with this question? Just go through the answer. And if you are having any doubt, just let me know. After that, we will discuss illustration number 5. In case of employee, yes, 1,80,000 is allowed as deduction, 1,44,000 in 80 CCD subsection 1 and additional 36,000 in section 80 CCD 1B. But in case of employer contribution, 1,80,000 you have to add in your income and you are eligible for deduction only 1,44,000. Clear, Mahadev? See, in case of government company, it is 14%. It is other than government. It is ABC Limited, not a government company. So in that case, it is 10%. Clear, Ayush? Here is the answer. Just read it. Ayush, clear? Everyone clear with this? Yes or no? Hitesh, clear? Please reply everyone. Yes or no? Done? Can we discuss illustration 5? Yes or no? Okay, no problem, Ayush. Himanshu, employer contribution you have to add in your income. It is not added in your income. The income is only salary and earnest allowance. The employer contribution is not in your income. So you have to add 1,80,000 in your salary income. After that, you will reduce 1,44,000 as employer's contribution in under section 80 CCD subsection 2. Okay, chalo. Illustration number 5. Contribution, the gross total income of Mr. X for AY 22-23 is 8 lakh rupees. He has made the following investment or payment during the financial year 21-22. Contribution to Provident Fund 1,10,000. It is eligible for ATC? Yes. Payment of tuition fee for Abjay School near Delhi for education of his son. Studying in class 10. It is eligible. Tuition fee? Yes. ATC. Repayment of housing loan taken from Standard Chartered Bank. Eligible for ATC? Yes. Dekho, ATC is done. Contribution to approved pension fund of LIC. Approved pension fund of LIC is covered under section 80 CCC. Right? 80CCC. So now, what is total of section 80C? 1,10,000 plus 45,000 plus 25,000. It comes to 1,80,000, right? But the permissible limit under section 80C is only 1,50,000. So 80C deduction is restricted to 1,50,000, right? Now deduction under section 80CCC. That is contribution to approved pension fund. Yes, whole amount is eligible for PPF. But the you have to check the permissible limit of 1,50,000. Now 80CCC pension is 1,05,000. Yes, eligible. Yes, why? Because 80CCC, the limit is 80CCC is 1,50,000. See, here this all payment are eligible for 80C. Yes or no? Yes. So first you have to total all the eligible payment under section 80C. Now it comes to 1,80,000, right? All the eligible payment. Now what happened? My 80C's permissible limit is only 1,50,000 and my eligible contribution is 1,80,000. So now 80C deduction is restricted to 1,50,000 only because the statutory limit is 1,50,000. Clear? Now section 80CCC state that you can contribute to approved pension fund and claim deduction up to 1,50,000. So here my contribution is 1,05,000. Okay, and maximum is 1,50,000. So 1,05,000 is less than 1,50,000. Yes. So full 1,05,000 is eligible for deduction under section 80CCC. Yes. So 1,05,000 in 80CCC. So what is my total deduction? It is 2,55,000. How it comes to 2,55,000? 1,05,000 under 80CCC and 1,50,000 and 1,50,000 under section 80C. Right? Total comes to 2,55,000. But section 80CCE state that reduction under section 80C, 80CCC and 80CCD 1 cannot exceed 1,50,000. So in this case, my deduction under section 80C is 1,50,000. Here it is 1,05,000. Here it is nil. So total is 2,55,000. But 80CCE state that my deduction of this 3 section cannot exceed 1,50,000. So I am eligible to claim deduction of from this only 1,50,000. Eligible deduction is only 1,50,000 from 2,55,000 eligible deduction. Now clear? Everyone clear with illustration number 5? My 80C's eligible deduction is 1,80,000, but statutory limit is 1,50,000. My 80CCC's eligible deduction is 1,05,000. So total deduction comes to 2,55,000. But section 80CCE restrict that the deduction of 80C, 80CCC and CCD1 cannot exceed 1,55,000. So from eligible deduction of 2,55,000, I can only claim deduction of 1,50,000. Yes. Government, see in 4th, Mr. A is not government employee, so you have to calculate as a normal employee. If it is government, then in that case, employer's contribution, in employer's contribution, you have to take 14% of salary. Employees part are same in case of government employee and other employee. Employees part is same in case of government employee and other employee. Clear? Yes, my dear. You have to learn section. You are CA student, huh? Chalo. Next is section 80D. Next is section 80D. It is for medical insurance premium. In 80C, you have studied life insurance premium. It is medical insurance premium. That is Mediclaim. Okay. Chalo. In case of an individual, deduction in respect of insurance premium paid for family, a deduction to the extent of 25,000. Now, what is the limit under section 80D for Mediclaim? 25,000. Medical insurance premium, the limit is 25,000 in case of individual. In respect of following payment. Premium paid to effect or keep in force an insurance on health of self, spouse and dependent children. See, 80C covered only children, whether it is dependent or independent. 80D covered only dependent children. Okay? Or any contribution made to central government health scheme or such other health scheme as may be notified by central government. So if you are paying medical insurance premium for yourself, your spouse and your dependent child, then maximum 25,000 is allowed as deduction. If your premium is 20,000, then 20,000 is allowed. So the actual premium paid, life medical premium, insurance premium or 25,000, whichever is lower, is allowed as deduction for your family. Deduction in respect of insurance premium for parents. For parents, you can claim additional deduction of 25,000 if you are paying insurance premium of your parents, whether they are dependent or independent, because here they have not mentioned that if the parents are dependent. So if your parents are dependent or independent, it is not relevant. So if you are paying medical insurance premium of your parents, then you can get additional deduction of 25,000 for the premium paid for your parents. A further deduction up to 25,000 is allowable to keep to effect or keep in force an insurance on health of parent of assessee. So you can claim, say for example, Mr. X paid there is no limit for a child. Premium is 22,000 and for parents premium is 26,000. So here actual premium 22 or 25, whichever is lower. So lower is 22 actual. So Mr. X can get deduction of 22,000 under section 80D for medical insurance premium of his family. And here 25,000 limit or 26 actual, whichever is lower. So 25,000. So he can get deduction of 25,000 for medical insurance premium of parents. So total Mr. X can get deduction under section 80D 22,000 for his family and 25,000 for parents. So total 47,000. Here. Quantum of deduction in case of senior citizen. Now, if Mr. X is senior citizen, then the limit, Mr. X or his spouse is a senior citizen, then in that case, the 25,000 limit is increased to 50,000. And if his Mr. X parents, either mother or father, is senior citizen, then the 25,000 limit is 50,000. So here, if the parents are senior citizen, then the maximum limit is 50,000. So actual premium paid or 50,000, whichever is lower. Reduction in respect of payments towards preventive health checkup. This is for reports, medical reports. Section 80D provides that deduction to the extent of 5,000. Maximum preventive health checkup deduction is 5,000. Shall be allowed in respect of payment made on account of preventive health checkup of self, spouse, dependent children or parents during the previous year. However, the deduction of 5,000 is within the overall limit of 25,000 or 50,000 in one or two above. So the 5,000 preventive health checkup is covered in total limit of 25. Say for example, Mr. X pay premium of 22,000 and health checkup, preventive health checkup of 7,000. Then in that case, it is 7,000 is available only to the extent of 5,000. So 22 plus 5, it comes to 27, but the limit is 25,000. So he can claim 80D deduction of rupees 25,000 only. Okay, and if he is senior citizen, then he can claim deduction of 27,000. Why? Because in senior citizen, the limit is 50,000. Clear? So preventive health checkup is included in the statutory limit and maximum preventive health checkup amount is 5,000. Mode of payment. For claiming deduction under section 80D, the payment can be made by any mode including cash in respect of any sum paid on account of preventive health checkup. So you can pay for preventive health checkup by way of cash or other than cash. But for medical insurance premium, you have to pay other than cash. By any mode other than cash in all other cases. So if you are paying medical insurance premium in cash, then you are not eligible to claim deduction. Okay. Who is senior citizen? So senior citizen is 60 years of age or more. Now deduction for medical expenditure incurred on senior citizen. This proviso deal with if a person is senior citizen and insurance is not taken on his life. And insurance is not taken on his life. Say for example, if a person is 65 years of age and there is no medical insurance for that person, then in that case, if you are incurring any expenditure for the treatment of such person, then you can get deduction of 50,000 rupees for the medical expenditure incurred by you on such senior citizen. It is available only and only for senior citizen. Okay. Why? Because in certain policies, after some years of age, you cannot insure your health. That's why. As a welfare measure towards senior citizen, but if you are insured and there is medical premium insurance for yourself, then no medical expenditure incurred on your health is not eligible for deduction under this provision. Why? Because already premium paid by you is eligible for deduction under section 80D. A person of the age of 60 years or more and resident in India who are unable to get health insurance coverage, deduction up to 50,000 would be allowed in respect of any payment made on account of medical expenditure in respect of such person if no payment has been made to keep in force an insurance on health of such person. So if you are not taking insurance on health of a senior citizen, then medical expenditure incurred on health of a senior citizen is eligible for deduction. In case of HUF, every condition is similar, but HUF can pay medical premium for their member, and if the member is senior citizen, the limit is 50, and if the member is not senior citizen, then the limit is 25,000. Deduction under section 80D is allowable in respect of premium paid to ensure the health of any member of family. The maximum deduction available to HUF would be 25,000, and in case of member is senior citizen, it is 50,000. Further same, if the member of HUF is senior citizen and the health insurance was not taken on that senior citizen, and HUF incur medical expenditure for that senior citizen, then HUF can claim maximum 50,000 rupees deduction on medical expenditure incurred on such senior citizen. Other condition to be fulfilled are that such premium should be paid by any mode other than cash in the previous year out of his income chargeable to tax. Further, the medical insurance should be in accordance with the scheme made in this behalf by GIC, General Insurance Corporation, or approved by central government, or any other insurer approved by Insurance Regulatory and Development Authority. This is the chart summary that what we have studied. In case of individual or any of his family member is a senior citizen, the aggregate amount of deduction in respect of premium, contribution, medical expenditure 1 and 3 above cannot exceed 50. And in case of parents also. Premium plus medical expenditure cannot exceed 50. Now what happened? You paid premium for 5 years or for 3 years. Then you have to claim deduction for proportionate. Say for example, I paid 5 lakh rupees. Oh, sorry. 1 lakh rupees premium for 4 years in current year. Then what happened? I have to proportionate. That is 1 lakh into 1 by 4. So 25,000 I can claim every year. Yes, insurance premium is eligible. Here it is given. Here in first para, it is for medical insurance premium. And it is for expenditure. The second para is for expenditure. Okay. So if you are paying lump sum amount, then you have to proportionate to the years. So I can claim 25,000 reduction in 21-20. Sure. Illustration number 6. Mr. A, aged 40 years, paid medical insurance premium of 20,000 during previous year 21-22 to ensure his health as well as health of his spouse. He also paid medical insurance premium of 47,000 during the year to ensure health of his father, aged 63 years, who is not dependent on him. See, we have discussed that the dependent child is covered, but the parents are dependent or independent, it is not relevant. Yeah, right? So he can claim deduction of 47,000 premium paid for health of his father. He contributed 3,600 to central government health scheme during the year. He has incurred 3,000 in cash on preventive health checkup. You can pay in cash for preventive health checkup of himself or his spouse, and 4,000 by check on preventive health checkup for his father. Compute the deduction. See, preventive health checkup, the limit is 5,000. So here for his family, it is 3,000. So it is eligible. And for his parents, it is 4,000. It is eligible. Now, for Mr. A's family. And here it is parents. Mr. A is not senior citizen, right? It is he is 40 years. So Mr. A paid premium of 20,000 for his family. Plus he contributed 3,600 to central government health scheme. Plus preventive health checkup 3,000. Right? And for his father, preventive health checkup is less than 5,000, so it is fully allowable. Premium is 47,000. It is not there. And preventive health checkup 4,000. So in case of father, there is total payment of 51,000. Father is senior citizen. 63 years. Right? So statutory limit is 50,000. 50,000 or 51,000 actual, whichever is lower. So it is 50. Here it is total premium, total 26,600. But the statutory limit is 25,000. So 26,600 actual or 25,000 statutory limit, whichever is lower. So here 25,000 is available, here 50,000. So Mr. X can claim deduction under section 80D, 25,000 for his family and 50,000 for his father. Clear, everyone? So total he can claim 75,000 as deduction under section 80. Chalo, illustration number 7. Everyone clear with illustration number 6? Mr. Y, aged 40 years. Illustration number 7. Paid medical insurance premium of 22,000 during the previous year 21-22 to ensure his health as well as health of his spouse and dependent children. He also paid medical insurance premium of 33,000 during the year to ensure the health of his mother aged 67 years, who is not dependent on him. He incurred medical expense of 20,000 on his father aged 71 years, who is not covered under the Mediclaim policy. His father also not dependent upon him. Dependent or not independent in case of parents is not relevant. He contributed 6,000 to central government health scheme during the year. Now, here, in case of Mr. Y, premium is 22,000 plus central government health scheme 6,000. So total 28,000. But Mr. Y is not senior citizen, so here the limit is 25,000. Right? Now parents. Parents is senior citizen. Insurance of mother 33,000. Right? Insurance premium of mother 33,000 and medical expenditure of 20 on his father. Right? And health insurance is not taken over on his father. Right? So medical expenditure is allowable. Why? Because the health insurance was not taken on his father. So medical expenditure of father 20,000. It comes to 53,000. But the limit is 50,000. So here 50,000 is available. Clear everyone? Total 75,000. Chalo, just go through this. Just quickly go through, and if you have any doubt, just let me know. Wait for 2 minutes. Yeah, just wait for 2 minutes. Clear everyone? So what you have to do everyone, you have to revise all the section, all the example you have to write down in your notebook. And if you have any doubt, just let me know in next session. We will discuss the doubt. And after that, we will moving towards next section 80DD. Okay? Chalo, have a good day everyone. Bye. I am ending the session today. Session end kar dijiye.